Why do I love co-living over all other rental strategies? So first and foremost, it's the best rental strategy that is a win, 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 win for literally everyone involved. It provides affordable housing to tenants who have been priced out of where they work and serve. So let me take a step back. What is co-living? It is taking a property and renting it out by the room. And formally, that's been like a boarding house or something. We try to cram as many people in as possible, kind of bleed into slumlord territory. That is not the best way, in my opinion. That's not even a good way to do co-living rentals. The way that we do it is we provide elevated, nice housing to people. Typically, they're young professionals or people who just really need a great house and a great room to live in. They need a kitchen that's really solid, but they're not overly focused on having a whole house themselves. What they want to do is live somewhere nice, live in a great property, great room, and save the extra capital to be able to do whatever they want with it. Some people invest that extra money, they put it in the stock market. Maybe they're real estate investors themselves. Others enjoy that money to go travel, eat out, literally whatever you want. Instead of spending all of your money housing, you can actually go and enjoy your life with that extra capital. So that is a big part of the housing that we provide, that really solid co-living rental and that affordable housing option that really helps people who work and serve in certain communities can no longer afford to live in those. That's not really applicable to, like, let's say a small town in Missouri or something. Like, I don't know if co-living is the best strategy there. We're talking about our markets, Charlotte, Atlanta, Phoenix, San Diego. Like, we're talking about these great locations that are extremely expensive to live in. People want an affordable housing solution. And especially the younger generation is willing to live in a shared space. Think of like a really awesome hostel, essentially, but you actually have your own privacy, your own room, so that they can save money and actually enjoy their life rather than giving 100% of their income, even more. Like sometimes they're going into debt just to pay rent to live independently because this is not an option everywhere. So this is what this is solving for. It's allowing people to come in, not worry about roommates and all that. They have their own space. They just rent out a room and they enjoy it. They don't have to worry about finding someone else to come in and all that. And they get to save the majority of their capital, a lot more than they would have otherwise, to be able to enjoy their life, right? That's number one. So an affordable housing solution to our tenants. That's absolutely one of my favorite reasons for co-living over all the rental strategies. But then for me as the investor, why do I love it? Well, I get way better returns. Not only am I getting to buy much better properties, like larger properties that can house 5, 6, 7, 8, 9, 10 people, right? So we're talking about 3, 4, 5 bedroom properties then that are elevated to be 6+ bedrooms. Not only am I get to buy these better, bigger properties that have better debt on them as well, typically because I'm buying my deals creatively financed. Majority of deals are 0%, 2%, 3%, 4%, as high as 5 and 6%, which is fine as long as the numbers are there. I get to buy better properties with better long-term debt, and my tenants are the ones paying down that debt, but I'm also making on average no less than $1,000 a month in cash flow per property. So if your goal is financial freedom, you can do that through, if you need $10,000 a month, you can do that through 10 co-living rentals, or, on average, you're getting $100 to $200 for a long-term rental. It's going to take a lot more, between 50 to 100 long-term rentals or 10 co-living, right? It's ultimately up to you. And not only is the cash flow higher, but if you're buying bigger and better properties, you'll get more appreciation. You'll get faster debt pay down. You'll get better tax benefits because the property is worth more. The debt is worth more. All the ownership benefits are amplified in a San Diego, in a Phoenix, in a Atlanta, much more so than an $80,000 property that generates $100, $200 a month of cash flow in a small town in Alabama, right? No offense. You do whatever makes the most sense for you. But I'm just saying, if your goal is to efficiently be financially free, you would want the one that generates more cash flow, that has better debt pay down, that has more property appreciation because it's in a better market, and has more tax benefits because the property is worth more. And the renovations you do to the property are also tax deductible. There are just so many financial benefits. Like another example is I don't buy co-living rentals that generate less than a 15% cash on cash return. So the cash flow is not just over $1,000, typically closer to $1,500 to $2,000 for me, but I'm looking at cash on cash return. My money is working incredibly hard at 15% or higher. And we have one right now under contract that will be closing in Decatur, Georgia, that has close to a 25% cash on cash return. So not only do I get much better returns, but more properties can work for that management strategy. It's very hard to even find a $100, $200 a month cash flowing long-term rental. It's not overly difficult to find a great co-living rental. Does that mean you just choose any house and you're there? No, but a lot more deals are available through co-living, through creative finance, like creative financing combined with co-living. You have a lot more investment opportunities than you would otherwise, as opposed to traditional financing long-term rentals, right? There's very few that make sense in that route. A lot more creatively financed co-living rentals, those crush it, right? Like those are a lot easier to to find. Still a lot of work, don't get me wrong, but it's a lot easier to find, and you get much better cash flow, cash on cash return, and much better ownership benefits as well. Another big thing that I really like about it is the diversification of income. So when you have, let's say, a long-term rental, your property is either rented or it's not. When it's not rented, you have $0 of income. When it's rented, you get 100% of your income, right? But everything in between is your vacancy. Every month of vacancy is 8% of what you thought you're going to generate in income is just gone. It's gone for the year. 8% is gone. When you have a co-living rental, it is very unlikely that you have the entire house fully vacant, right? You might have a bedroom or 2 or 3 out of 6, 7, or 8, right? You usually can cover your mortgage with 3 to 4 bedrooms. So at minimum, you're covering your biggest expense, which is your mortgage, the debt on the property. And as you continue to stack more and more full rooms, then you get more and higher profits, right? So as opposed to a long-term rental, a mid-term rental, a short-term rental, when it's vacant, it's fully vacant. Co-living, when it's vacant, we're talking about bedrooms, not the full house. It is very unusual for a full house to be vacant, but you might have 1 or 2 bedrooms that are vacant, but that's awesome, right? That's way better because you have much less vacancy. And let's say you're dealing with an eviction. Well, if you're dealing with an eviction on a long-term rental for your entire house, you're going to be missing income and have all these additional expenses for 1, 2, 3, 4, 5, however like many months it takes to get the tenant out, renovate and fix the property, and then find a new tenant to go in there. Or with co-living, if you have a tenant that's not paying for one of your rooms, that's not impacting the other rooms. And if they want to destroy a property, it's going to be very hard there's multiple other roommates for them to be able to destroy the common areas, destroy someone else's bedroom, right? Maybe they can destroy their room or steal stuff, but that's for that specific room as opposed to the entire house. And it's also awesome because I don't have to worry about parties. No one's renting out a co-living rental to throw parties in like my short-term rentals, right? We deal with that all the time and it's super annoying. Or people destroy things, and it's much easier to destroy on a short-term rental that is fully rented by an individual. Even with all the tools and noise trackers and this and that, it's still much more likely things go wrong in a short-term rental, mid-term rental, and long-term rental because there's no accountability of peers, right? In a co-living rental, you have your peers there. You have people there that will not allow you to destroy their area, and because they're paying good rent, they're working hard and they're paying good rent to be able to afford that place. They're not going to let you just destroy their space. So you have that, you're insulated from kind of some of that downside risk, but also you have much less vacancy, which is spread out because it's vacancy per room or non-payment per room, not a vacancy or non-payment for the entire house. And another reason why I love it compared to like a short-term rental that generates similar cash flow, $1,000, $2,000 plus, is because, well, first of all, it's way easier to set up and manage a co-living rental than it is a short-term rental, in my opinion. I think it is much easier to set up and manage, but also you don't have the same volatility in rental income and vacancies that you do with short-term rentals. A lot of short-term rentals, like mine in San Diego, yeah, they're good year round, but a lot of places are very seasonal. Maybe you'll have a great summer or a spring or a winter, but rarely is it fully crushing it all year long. So whatever income you get in excess, you have to save for when it's slower season so that you can cover your expenses. That's not the case with co-living. People need rent by the room housing like all year long, regardless of the season that it's in. Maybe if you're doing something in like a military market, maybe you have higher need for housing, right, during the move cycles, summer and winter. That doesn't mean there aren't people constantly looking for room rentals. Whereas short-term rental, a lot of the times it's seasonal and your income comes in bursts. Even in my San Diego property, I get 3 times the income in summer than I do during the winter season. It's San Diego, so people are traveling all the time. But nonetheless, it's really awesome that my income is much more stable. It's like a long-term rental with the stability, but you get the benefits of much higher income without the vacancy risk of my full house is vacant. I need to do an eviction. I have a non-paying tenant. Like it's all insulated per room as opposed to the full house. I think I hit a bunch of things there. So to summarize, why do I love co-living over other rental strategies? It is an affordable housing solution to our tenants. We get much higher returns as an investor, over $1,000 a month cash flow. I'm getting 15% or more cash on cash return on my deals. Because I get higher returns, I didn't even hit this. Because I get much higher returns, it is much easier for me to raise capital because now when I'm paying a private money lender or splitting the returns with a private money partner, there is more meat on the bone to spread, so it's easier to raise the money on those deals. I'm buying larger properties in better locations, which then get more debt pay down, higher property appreciation, and more tax benefits. And the diversification of income, because it's per room, not for the full house, diversification of the income streams allows my properties to perform better with less vacancy on the full house. And I get the benefit of the non-seasonality that comes with short-term rentals, right?